The chart looks unusually calm today, almost too calm for a token known for sudden bursts of volatility. Shiba Inu has tightened into a narrow squeeze, forming one of the sharpest compressions seen in recent weeks. Traders watching closely say something feels different. Volume is steady, price is coiling, and momentum indicators are flattening. Is this quiet phase simply another pause, or is Shiba Inu secretly preparing for a breakout that could erupt without warning? Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. Throughout November 2025, Shiba Inu has moved through a complicated structure that blended weakness, strength, hesitation, and hidden confidence all at once. Earlier in the month, the token slipped down from higher ranges and gradually drifted toward deeper support zones. It lost ground, but not in the chaotic way that usually accompanies steep downtrends. Instead, the market entered a slow, steady, almost controlled slide that softened as price approached the lower end of its structure. The decline pushed Shiba Inu beneath the important psychological region around the equivalent of 1,000 units, leaving traders concerned that the token might enter a new bearish phase. But instead of continuing downward, price began stabilizing. The candles became smaller. The intraday swings became quieter. The market seemed to settle into a different rhythm, one defined by narrow movement and reduced volatility. This shift signaled that the token was entering a compression phase, a period where momentum disappears on the surface but builds underneath. By mid-November, the broader structure revealed a clear descending triangle, with lower highs pressing downward while support remained stable. Despite the triangular shape, which often leans bearish, Shiba Inu refused to fall apart at the bottom. Every touch of the lower band brought new defense. Sellers lost strength, buyers became more confident, and with each passing day, the space between resistance and support tightened further. This tightening drew attention from traders who specialize in volatility cycles. These traders observed the same thing. Shiba Inu wasn't collapsing, it was compressing. Around this same time, derivatives traders began closing their positions, causing open interest to fall noticeably. A drop in open interest usually indicates that leveraged traders no longer want to gamble in that moment. When leverage drains out of a market, price movement often becomes cleaner, slower, and more controlled. This is exactly what happened. The token's movement suddenly became smooth and consistent, without the sharp wicks that accompany liquidation-driven volatility. To analysts, this was one of the clearest signs that the token was entering a pressure-building environment. Heading into November 20, live prices keep Shiba Inu trading around the 890 to 920 unit range. Volume remains healthy, rotating between $160 million and $170 million within 24 hours. The market cap holds near the $5.1 billion region. None of this reflects a dead asset. It reflects steady engagement and a willingness for buyers and sellers to meet at a fair price, a sign of market maturity. Short-term predictive models built on machine learning patterns suggest that Shiba Inu may drift slightly lower into the mid-800 unit region in the near term. But these same models highlight that the drift is still inside the structural band and does not represent a breakdown. Instead, they interpret it as part of the ongoing compression, like a spring being pushed further inward. On-chain activity and technical indicators agree with this interpretation. Reduced open interest, stable spot volume, and balanced order flow create a foundation for higher accuracy movements. Long liquidation clusters and short liquidation zones become weaker as traders step back from risky positions. Without these extremes, the chart becomes more reliable, and patterns start behaving in more predictable ways. Chart specialists reviewing the structure emphasize that Shiba Inu has attempted several minor breakouts over the last few weeks. These attempts poked above resistance lines but fell back quickly as the token lacked momentum. Normally, failed breakouts are a bearish sign, but when they come during compression, they often signal something else: energy building. Each failed breakout becomes a clue that buyers are testing the boundaries. When these boundaries weaken enough, a breakout can occur with far more strength, supported by pent-up demand. Technical structure analysis across November highlights two critical regions. The first is support around 950 units, where buyers have repeatedly stepped in to prevent deeper declines. The second is resistance near 1,025 units, where sellers have repeatedly defended the zone. This creates a tight battlefield. Every candle formed between these levels pushes Shiba Inu closer to a decision point, where the structure will eventually have to break. Descending triangles often lead to downward moves, but when combined with compression, declining open interest, and repeated defensive support, they can flip into reversal structures. A similar pattern was observed earlier in the year, when Shiba Inu's volatility tightened to its lowest levels since early 2024. Back then, the breakout that followed was sharp and fast, catching many traders off guard. Today's pattern resembles that earlier one in several ways, but with deeper consolidation, which makes the outcome even more unpredictable and potentially more powerful. In the short term, analysts expect cautious movement. Forecasts for the next 1 to 4 weeks vary slightly, but lean toward a muted drift unless price breaks out of the defined band. Some projections anticipate a mild pullback into the mid-800 unit region. Others believe that if Shiba Inu closes above the 1,025 unit resistance band with real volume, the token could begin a controlled climb of around 15%. This move would still keep Shiba Inu within its broader range, but would set the stage for a larger attempt toward the 1,200 unit corridor. For breakout-focused traders, the real line to watch sits higher, near 1,200 units. A daily close above that region, backed by rising volume and a surge in liquidity rotation, could confirm a significant breakout. If such a move occurs, the compressed structure could release its stored momentum in a fast upward burst before settling into a new range. Looking beyond the near future, long-term outlooks describe wider scenarios. Some long-view models suggest that Shiba Inu could gradually push toward multi-thousand unit ranges between 2026 and 2028 if ecosystem expansion remains consistent and adoption cycles improve. Bullish forecasts argue that Shiba Inu may benefit from Shibarium's continued development and potential real-world integrations over the next few years. Other long-term projections remain cautious, predicting a slow consolidation process throughout 2025 before larger market cycles take over. Despite their differences, all long-term models share one theme. What Shiba Inu does during compression phases often sets up the next major trend, whether upward or downward. Compression is not a trend by itself. It is a precursor to a trend. Community sentiment also reflects this tension. Some members feel frustrated by the lack of explosive movement, remembering the wild rallies that once defined Shiba Inu. Others recognize that the current calm represents an opportunity. They see the controlled price action, the defended support, the quiet reduction in leverage, and the tightening volatility as bullish signals. They believe that these are not signs of weakness, but signals that the market is preparing for something larger. Developers continue working quietly on ecosystem upgrades, avoiding hype-driven announcements. They maintain a steady pace, leaving traders to interpret the charts and patterns instead of relying on marketing campaigns. This restraint has added a sense of credibility to the ecosystem, as the market begins to respond more to structural conditions than loud promises. From a balanced perspective, today's compression contains both opportunity and risk. Bears argue that the descending triangle and earlier breakdown below the 1,000 unit zone hint at a possible continuation lower. Bulls counter that repeated support defense, reduced volatility, softening leverage, and consistent liquidity represent the ingredients for a breakout. In truth, compression amplifies whichever direction eventually wins. It creates the kind of silent tension that can erupt into explosive movement. As Shiba Inu sits inside its tightest structure of the month, the setup becomes more compelling. This is the kind of pattern that markets remember, A breakout could trigger fresh enthusiasm and shift the entire tone of the chart. A breakdown would simply prolong the consolidation and delay the next attempt. But either way, the squeeze is nearing its limit, and the market cannot remain this quiet forever. So as Shiba Inu sits at the edge of its tightest range of the month, with the entire market watching in quiet anticipation, every candle inside this narrow band adds more pressure to the coil. A breakout could reset the trend and draw fresh momentum, while a breakdown would only delay the next attempt. Either way, the squeeze is reaching its limit. The real move is coming, and Shiba Inu is preparing for it silently. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.